Market recap for Tuesday, 28th of October 2025. Okay, today is going to be, let's just say, a masterclass, right? I'm going to dive very detailed, very deep into a lot of concepts and how you could navigate this day and what I did. So, let me just get the blanket 1 second. Alright, let's jump into it. So, yesterday night, right? So let's head into the daily. Just explain what we had. So on the weekend we had a big gap. So Friday we open up on Monday, right? And then we go up, we just start going higher. Then 9:30 comes, right? So let's just show that. And again, okay, that's not the 9:30 one, but so let me show it from regular trading. 9:30 opens and we just go higher. We don't even bother, right? Retracing. This is sus, but it means the price is going somewhere, right? And if you're trying to go on the wrong side of it, you're gonna get cooked. However, it invites people to chase it, right? And normally that equates to like a big manipulation coming, right? And if we think about it, what do we have on Wednesday? We have Wednesday FOMC, right? So do you think it's plausible that they could run it up for 2 days for Wednesday to just take all of them blows? Me personally, I believe that's the case, right? I believe that's what's gonna happen. And if it's anything against that and he wants to go higher, I'm not interested. Okay? So, because this seems a bit fake, let's just say, of a run up, right? It's a bit too bullish for my liking. And it could be that bullish. I just don't know yet, right? If this market is gold, then fair enough. But this is Nasdaq, and Nasdaq does tend to manipulate, right? So I'll say this is the ended distribution, right? From this leg down all the way up here. That is the distribution, right? So I had my minimum target for this week, which would be here, right? I feel like I should fix it really, right? Because I'm getting minimum of the manipulation if I just do the whole swing. So let's get that, right? The minimum target right there, 2.5. Okay, so that was my minimum target for the week, and we've reached it. So what do I expect now? I expect the manipulation to start, right? Why? This will give us time for Wednesday to go down. Use FOMC to even go down even more, okay? And where? I'm going to explain all of that later. So let's leave what the week is going to do, and let's actually get into what this day is done and why I expected, etc. Blah blah blah, right? So there was two scenarios for this day, right? So let's keep in the 15-minute, but zooming closer till let's actually drop down to the 1 minute. Okay, there was two scenarios for this day. One is we chill around Monday high, right? So Monday high, so we go around here but do not take it, right? Or if we take it, we just kind of like sweep it kind of and then make sell side liquidity and then slowly exactly do this, right? We keep doing this but slowly grind our way lower to like somewhere like here. Basically go nowhere. Just straight up consolidation day. Second scenario, this full extension. Why? Because how this weekly is gonna play out. If this is my minimum target for the week, this line, I think about it. What could have we done? We could have went up here, right? It consolidated for Tuesday. Wednesday went down, manipulated, and then Thursday and Friday we come back up and take this high, right? Which will give us a classic Wednesday low of the week or the Wednesday reversal. So it just depends on the news. So now it looks like it might be the Wednesday reversal, right? So it's two different things, but it all involves Wednesday being the manipulation day, right? Market profiles doesn't matter, doesn't have to get that deep, but this is my point, is what we could have done is either this or that. Now we know that, okay, and that's why, because there is this or that. For me personally, I was like, you know what, because I'm unsure, I'm gonna lock my XFA accounts and lock them out for today, because I want to be more on like the 90% sure what the day is gonna do, rather than say, okay, shall I short it or shall I long it? However, and I did sleep through. However, my model was there and it was beautiful. It was perfect. It was just textbook my model. So let's just go through what it entails, right? So the continuation model for all-time high is as simple as this, right? Because we do not normally, as long as we don't have the daily PD arrays that we can work with, right? Because if I look at the daily, what do we have? You know what I'm saying? So you drop to the 4 hour and you got the new daily opening gaps, the new weekly opening, whatever, them other PD arrays. However, 4 hour is your friend. So looking at this, fair value gap, it's tweaking, right? We can see what London did. When London goes basically perfectly to a level, right, that's outlined as a 4 hour, which now counts as the daily time frame, right? For me, 4 hour day, like, it's gonna have that significant. When it goes there basically perfectly, right? To me, that's basically perfect, right? It only goes that lower and like bodies here because, you know, the wick. However, for London, this is, for me, this is good enough, and then goes. That for me is the low of the day, right? Like if I wake up at New York, I know that's the low of the day, and we're gonna expand higher because this is gonna have one profile for the day, which is London goes higher. New York starts the retracement and then goes higher again. It's as simple as that, right? It literally does that 99%, 99%. Okay, that's wild. If you understand it, if you understand this profile, it does it almost every time, right? So you want to catch the continuation, right? And you're gonna have to gauge this, like the same thing is you have to get discount, right? So from this high to this low, as we can see, discounts around here. So let's just remember that. Can't be else with the too many lines. So the model includes is discount, then liquidity, and then PD array. Do we see any liquidity here? No, right? So for this model to work, liquidity would be these liquidities, which would be Asia, London, the 7 name initial, right? Clearly, none has been taken. However, on rare occasions, but like there has to be a lot. That's what I'm saying. This is masterclass one because this needs to include all the three markets, YM and ES, right? With NQ, right? If you wanna do this, right? This alone is one of my models that I'll explain later, but for the other model, the main one for the continuation, right? This low needs to be taken. However, this low can be SMT'd, okay? And on top of that, there still needs to be a low below discount to be taken that is significant, right? So once we make this low and go up, now that's our significant point that needs to be taken, because again, if we still want to go higher, but discount was here, then liquidity, and remember it has to be in that order: discount, liquidity, and then PD array. Remember what this is? Okay, I didn't even show what this is, right? So when we make this low, this don't count by this time, right? 1040, but actually does count. So it goes to PD array, but think about it, it doesn't go to low than PD array, okay? I know it sounds confusing, but you just bear with me, okay? So now below that low, okay, you wouldn't see it in the 4 hour. That low, remember it was right here. So what's below that low for PD array wise? We have this wick, because it's the biggest wick, we're not going to count this, and we have the order block, the opening price. So I'm looking at price to react at either the lower quadrant or the opening price. It's simple as that, right? And I want something to be nearly perfect, right? Near perfect reaction of it and strong. Okay, so as you can see, at 11:37 goes all the way down to take this low. Okay, and then goes to the lower quadrant and look at the reaction. From that alone, in the 15-second, you'll see me buying up here, right? Because why? This is two models: my delayed judo model, my continuation model, both of them in one at this time. Okay, this can't be done unless, right? Let's look at ES from this way so it's bigger, right? ES or YM, but mainly ES has to have its own structure. Okay, so ES has to take one of these lows. It has to take London, or it has to take the initial. It has to, right? And as you can see, this SMT is it's not like the easiest one to spot, right? Because yes, you might be like, okay, we SMT'd, so we should be able to look for longs from like 947, right? I mean, based on the model at 947. Where is it? There. You'd say, okay, that low SMT, so if we take this low, we should no, right? Because we still haven't reached discount. Okay, so once discount is reached here, right, we still have not take this low. If we made here, right, discount, and we've made a proper swing low, right, this could be taken, right, in itself, right? Okay, this that's the thing, right? This in itself can be taken, right? And it's not when it's like a lower class tier of the model, right? But I'm gonna check if it fits the criteria, because does it offer 750, right? That's my question. So is that nope, it does not offer 750, which it has to be 1.5k here, right? In itself, that's a lower tier entry, right? Because yes, after the 10 a.m., then we'll have the swear discount was here, right? This is not a significant low to be taken, right? It has to be a significant low. So you could enter here, sure, but as you can see, it's a low tier entry, right? And you would expect, and there's nothing wrong with entering it, right? But you just know that it's most likely not gonna work out. And on top of that, the model says when there's a 5-minute gap is closed, you go to break even, right? And clearly there's no 5-minute fair value gap, right? So lower time frame, max is low is 3-minute, right? So when this is closed, you'd have to go break even. So you'd get taken out break even or profit regardless, right? But let me explain the proper one, right? Once this one is made, now we go and take that low, right? And then actually hit the PD array in the discount, taking liquidity, and what validates it is we're already taking this liquidity, okay, on ES. I know this sounds way too complicated, right? But bear with me. ES in itself, why could ES go lower and even go to London low initially here? It could have went to London low if it wanted, and it would still be valid, right? ES, when you put it in the obvious thing, you can see that in London we take liquidity, take liquidity. However, we do not reach the 0.5 of the fair value gap, or we don't reach anything of the fair value gap that makes sense for it to be lower today. However, once we go up, we make relative equal lows, right? So to me, yes, this is the main low. This is a low that it could come and sweep to, and it will still validate the SMT, okay? And on top of that, now we're gonna have, because it's after 10, we can have the low of the day kinda, or the low of the session for New York to make sense. and because it did not reach discount here, I mean a discounted PDA rate to the tick, basically that's what I mean. Here in London, we could look all the way even below this, right, for any PDA rate. So we put this wick as a prominent wick, 0.5 of it, that's what we get right there. Okay, so once price goes to, again, we can't really identify the discount here, right, unless I was following yesterday's price action. But this discount is not going to be like from London to here. No. For ES, it's got its own discount, but I'm not sure what PDA rate or what low it would have been. But like, let's say it's from that high to this low. I'm guessing it's not, because like you have to be following the market. I'm not following it, so I don't know which low would have been discount. Maybe this. However, you'll see if you're following it, it's going to be in the same part that discount is somewhere here. So you'd wait for it to go to discount, because this wasn't the discount PDA rate, and then it'll be again liquidity. It already done that part, but then again, this where comes the SMT with YM, right? And you'll see this keeps getting like kind of more complicated. So like this day, that's why this day is a bit, it's the same model, it's there, right, but it's hard. And you see, like with YM, we don't take the low, right, we go up there. We make a higher high here, which then validates the NQ one down. I'll take it on the NQ. Anyway, I know that sounded like a whole lot of gibberish, but I hope, well, I understand it, and that's what matters. Anyway, now this becomes basically an A+ setup at this point, and then you'll take it. Why? Because this is the delayed Judah model, not on NQ, but on ES, right? ES is a clear Judah down to take relative equal lows at or past 10 something, right? Like 10:30, whatever, right? It has to be a bit later than the normal Judah at 9:30, so I'm mainly looking at 10:30, right? And what is to the prominent liquidity that you've been eyeing out all morning, which is these lows, okay? It's a PDA array. That in itself gives this the delayed Judah model, which you'll take this swing, right, and you'll wait for it to get to 2.5 or the end of the day, right? Same with NQ. NQ has not done the exact thing. It's not the delayed Judah. It's not the liquidity that you've been eyeing out, because there's not really that liquidity unless we're looking at it here, right? So that's basically our SMT at the main one. Right? It's not the lowest low, right, not the initial, but mainly these lows, right? So because it doesn't go to them, we can't have the delayed Judah. However, then we're just gonna have to do the same thing, but with taking the whole swing as the 2.5, right? Because then this whole thing is kind of the swing down. I wouldn't call it a Judah, but the swing down. And you do the same thing and you get the 2.5, right? So you see how we can work the targets, but like it's different BS, right? So now let's get to what I done. Okay, so all of this garbage, I wouldn't even lie, like to myself, I think if I was trying to catch the consolidation slightly going down, I might have shorted here, but I think I would have got taken out or would have got pissed off of like some, like, you know, how slow it was, because I did expect it to grind down initially in the morning. Actually, never mind, if I seen what London done, I wouldn't have done that, so I'm just capping. I make excuses of how I would have lost. I wouldn't have lost. Anyway, what I done this morning, we go up, because this is the delayed Judah model or whatever. I know it's on the ES, right? I know this is gonna go to one target, which is the 2.5, or at least the end of the day if it can't reach it, right? And then it'll reach it tomorrow morning or something like that in London. So I know it's going to be brain dead going up. When the market is brain dead, you have to be brain dead. It's literally simple that, like, if you're trying to do too much when the market is brain dead, you'll get hurt, right? If the market wants to be brain dead and just go higher, don't go against it. Just go higher. Literally just go higher, right? So I woke up very late today, way too late, because they moved the clock here in the UK as well, so I even got 1 hour less. So I woke up around here, right? And this to me was an initial target for something I can't remember. This right here. So if the market wanted to go lower, it should have went lower here, or maybe lower here when it SMT'd. However, through the line that I had, we have a fair value gap, right? So knowing that it wants to go higher based on my model, so I said, you know what, for this day I'm gonna trust it. I'm not even gonna look for lower prices. And I know this is technically, you would say it's chasing price, but not really, because the brain dead days, when they go up, they keep going up and down, up and down, up and down, up and down, up and down. They keep taking the liquidity. So I'm looking for the next time that it goes down and it looks like it's going lower, because you'll notice it's doing this the whole day, but like it's slowly going up. You just need to enter and not watch it, right? So, and I only enter like this, or even care to enter this on combines, right? Because again, it is still kind of technically chasing it, but it's not really, right? Because you understand what the market is doing and you're just giving it room to do all of this, right? Fake people down while people trying to short, people are this is high, trying to pick the high basically, right? It's a day where you do not want to pick the high, right? When it does the delay through the model, especially, you do not ever want to pick the high on this day, because it will keep grinding you higher, right? So anyway, once we go up, go down, right? This is the only fair value gap left. Like look at all of this. So if we lose this, we actually would most likely go down, right? Like if we lose this and then lose this swing low, most likely go down. The candle goes like, they make big candles going down. That's the sign, right? But then it gets overlapped quickly, so no fair value. That's a sign that this is just a retracement, right? So once this goes down, validates this, and then breaks this swing higher, now I know, okay, this is just gonna go for the rest of the day up. So this goes down, down, I'm buying this fair value gap, I'm buying, and then on top of it here, when I see this, I bought, waiting for one more fair value gap to form, stop loss at the low, and just let it run. And then let it run all the way to my target, the 2.5. You see, it's literally like at 2, right? When I'm trading the PM session, it's how late. But because it has not reached its target, I understand, right, that I can literally enter, put my stop loss all the way at like somewhere like this low, because it could come and want to take like this low, right? This is how it could go. Like I'm okay with risking like going for like a 1 to 2 on this day, or 1 to 3, whatever, right? Which I never do. And normally my trades are just basically 1 to 10s and shit like that. And I just understand like there is no real precision for this day. It's just gonna keep trying to take lows and keep going higher. Keep taking lows and keep going higher. Okay? So once it's done that, I just enter, don't even look at it, hop on Rocket League until my TP gets hit. And that's it. It's just a was it the max profit? Yeah, I think it was for that account, it's 1.5k. So it's simple as that, really, if you don't try to fight the market, right? Because me previously, and I would do this for weeks, right? An all-time high, I will try a short any and every one of these, right? And I would get them right, you know. I'd get all the swings right, but get break even, swing right, break even, spring. Bro, I remember one day I might have had 10 trades, like I caught all the highs, and then I'll just get break even, until I learned, bro, if the market wants to go higher, stop chasing it down. Unless, see this is what I mean, unless we are at the final hour macro. However, the final hour macro is so tricky, and for, I'd say, weeks now from watching it, I feel like, okay, I'm gonna go develop a model for it, right? And then we're gonna let me speak about the model rules and how to get it, because if you fuck it up, you're gonna eat ass, right? like final hour macro is one of them ones where you need to know if today's the day for the final hour macro, right? It doesn't mean every day that's going up and hasn't taken its liquidity down is a final hour macro, right? Because look, they didn't take this liquidity and gone, and we had a final hour macro. However, Monday, for example, we didn't take our liquidity again, and we do not have a final hour macro. You see what I'm saying? So you need to know the rules for a final hour macro. And final hour macro is actually low-key good because I think you can just risk a lot in it and the trade just takes like 5 to 10 minutes. Right? So let's speak about final hour macro. Okay. Number one. Somebody knocking the door. I don't know, I heard the door. Whatever. Anyway, final hour macro needs to have how do I explain this? One supporting thing is if you can find the standard deviation, right? This one, even though it's scuffed, is valid, right? And let me explain it through the rules that I made for a final hour macro trade. Okay, this target has been identified from the swing, right? From all the way once we start the expansion on Wednesday of last week. Okay, so it's nearly a week target and it's been hit. The target for the day as well gets hit. Okay, that's two. See, these are nice to have confluences. These are what makes it an or A plus, right, setup, right? If you have these, it's not needed, but if you can't find them, whatever, right? But to have them means you could increase leverage, for example. Doesn't make the trade or the model or whatever less than it should. Okay? But I am hearing the door, but it sounds... Anyway. Bro. What am I hearing? Okay, alright, because I'm not making no cuts on this. Let me actually just finish this quickly and then see what go on. Anyway, so these are nice to haves, okay? However, the essentials for this model is a clear sell side liquidity, okay? A clear sell side. Bro, I'm got 1 minute. This. Okay, I'm actually confused on what I'm hearing, but anyway. Alright, so what was I saying? The essential for this model is two markets need to have clear sell side liquidity that needs to be taken, you think, right? So if you're following what the market's been doing, it's like it's filling every gap, everything. So like if you're looking at from like the 5 minute, 15, whatever, right? So once we leave this range, you can see like there's no gap, there's nothing left. It's a high resistance liquidity run until this, right? We leave a big 5 minute gap. So that's something to fill, right? Look at it in the 15, same thing. They're all filled except this one, okay? So now we know that, and there's sell side under it that makes it, what do you want to call it? High chance, whatever, high probability sell side liquidity to be taken, right? So you need to have that on at least two markets that will have that sell side. Yes, you can see the same thing, just obvious. Right there. right? Sell side liquidity. And we have that 1 minute fair value gap that is unfilled. Okay. And YM, right? On YM, I'm eyeing a liquidity from the morning. The one that SMT'd is these lows. So now we have 3 reasons to go down, and you'll see normally YM could, okay, I don't need to mark it properly. Anyway, is leading lower before any of this, while the other ones are going higher, which could indicate that they'll go lower as well, right? So you need to have at least 2. Now that we have at least 2, right, there needs to be an SMT. This is not optional. It needs to have an SMT close by, right? So let's start this properly. First of all, we need to know what time we're looking at this. This time we're only looking at from 3:15, right? So 3:15 is the only time that you're looking at this to start or head lower, right? You need to look at an SMT, and that will be from 250, right? So from 250, we're looking for an SMT. 315 is the earliest we could go to, but we mainly looking to push it down to 330, right? However, we can start with 315 because that's when the actual macro starts. This is when one macro starts, and then it'll finish at 310 for this 315 one. Okay, so there has to be an SMT around here, or even in here, right? Like this section of time, right? We need an SMT either close by or an SMT a bit further, right? But there has to be an SMT, right? So why? Because one of them will have a breaker, and then that's the one that you enter. Okay, so here, as you can see, we have a high, low, high, high breaker, right? But we had high, low, high. You know, we keep having this. This is not something uncommon, right? But when does this validate, right? You need to have no. I know this seems like a lot of rules, but trust me, I'm refining it to like basically you can't really lose, or it's very unlikely that it's a loss, right? So you need to refine it to where the break of structure, I'd say, right? Not a market structure shift, the break of structure, because a market structure shift, I'd say like we might have to get all the way or something like down there. But a break of structure, a small break of structure, is like this swing, the prominent swing low, swing high, whatever, right? So if there's this swing low, for example, what can we see? So let's test this run, for example. Right here, let's say I wanted to take this as the breaker short, okay? Where is the swing low? All the way here, okay? So all the gaps in that swing low have to be used, right? And then this gap needs to be inversed. So this gap gets inversed. Boom, that's perfect. And then I'm looking to enter anywhere here. However, all these gaps under this, all the way to the swing low, have to be used as well. This is very important. We don't want anything to support price if it wants to be high probability. So that's why this don't work. Here, where's the swing low? All the way here, right? Do you see any gap that is not being used? No, right? This don't matter because here, then this will be a breaker structure, and then these gaps don't matter. Okay. However, in the whole prominent swing up here, we need this gap. If this gap was not used, no trade. Simple as that, right? No trade, because it'll most likely support price in some way. This gap used, we take up and we go up to our targets. Both targets hit. Okay. So this gap technically should be a really high probability gap to go higher. However, we go and inverse it and close down. So now, think about it. What's the time of this, right? The 3:30 mark, right? We at prime time for the final hour macro. I said we're looking at since 3:15, right? We're looking at something to create this structure. So from here, we're watching price and we see, okay, this gap is used. Okay, this gap is great. 3:15. Now look at 28 and 34. Okay. By the way, the SMT doesn't have to be crazy. That's what I'm saying. Like, it needs to be just a small SMT, right? We know why M is SMT in the shit out of this, right? But when I'm talking about SMT for this, I'm talking about for the entry, we need to know when to enter, and that has to SMT 28 and 34. Oh, now we know our SMT. Why do we want to enter at this one? Because it'll be the higher one more time, right? It'll be higher one. This would be more bearish, so it depends on where the TP is, right? So it doesn't matter, but I prefer to always enter on a Q, so I'll just use ES as confluence. Now we got our SMT, okay? So line up the rules, Wait, let me sort this out. So you need to watch both markets when they were going up, because on ES, for example, here, I know this sounds like a lot and a lot and a lot and a lot, but it needs to be a lot because, bro, you're trying to short a market that's just printing higher. You know, you have to get it right. You can't fuck it up. Anyway, there's a 5-minute fair value gap here that I expected price to hit it and go up. However, it didn't go up. That's a very high indicative of, you know, sell side that is prominent, that is easy to get to, right? And you can see it went to that first and then it went to the second one, right? So bear in mind with that with ES. So now we have the rules, right? A swing that does not have support, basically, in terms of fair value gaps. Why? Because once we inverse this, there's nothing that stops us from taking this low. And if we're going to take this low, we're going to break the structure, which means we're most likely going to go to these lows, right? Within our time, right? So here, we're going to start at like 250, right? We're at 250. We still want to see that we basically print in higher prices. We're not taking liquidity. 250, and like I'm basically saying it needs to generate liquidity at that time, and you can see it needs to generate liquidity. At 315, we're looking for it to do the manipulation basically for it, and normally I find it is 315 to 330 is like the manipulation, and then 330 till the close is the distribution basically of it, and then maybe the last 2 minutes a bit of retracement into it, whatever. We don't need to get that deep into it, right? So time, okay, SMT, a breaker, right? Boom. First entry into the gap, right? See, when I'm more confident, I'm just gonna like enter the SMT like a small one. But for now, entry at the gap, and you have to pyramid, right? Because the range is not crazy. You're gonna have to pyramid, so it'll most likely get the average entry around here, stop loss around here. Now once we get that low, and probably you don't even want it to close there. And why? Because then this will make the proper breaker. This to that is your proper breaker. Now this is like your whatever breaker. This is your proper breaker then, and you'll know it's high probability when it has a fair value gap in it, right? So more time, if you really stick with the stop loss, right? It should not go above this. Why? Because this goes above this fair value gap, right? The busy inside the breaker, right? Anyway, own rules for the stop losses or whatever. But if you want to be safe, just slap it up there, right? But I'm probably like wherever you get the average entry, that's your first entry into that volume imbalance, into this gap, and then second TP. Don't even go crazy with it. The what do you call it, the fair value gap, there's gonna be that obvious fair value gap, nothing's close to it, nothing is used, which is this one, right? So as you can see, easy trade, a lot of rules, a lot of token, a lot of watching, but you're only doing that for the final hour, right? Most likely most days I'm not gonna be at 9:30 or even like waiting this long. I'll probably miss this trade, right? Because life, right? I'm doing shit, right? I'm not here watching our market all day every day, right? And if I notice this, for example, like let's say for a day like this, I slept, right? This is a trade that is allowed on the XFAs, right? This trade is not allowed on the XFAs. This is just combine. This is, I don't care, bro. You know what I'm saying? I know I'm mostly likely right, but if I get it wrong, it is what it is. This is allowed on the XFAs because it has a lot of logic, a lot of reasoning behind it. Okay, so I'm gonna write this up. I'm gonna refine it even more, but this is the gist of the model for final hour macro. Entry, pyramid, take them off here. That's it, right? You can't mess it up. Another example, I'm gonna run through this quickly, right? So Monday, for example, this goes all the way up, but there's no final hour macro. Why? So let's look at 250. Where's 250? First to 250 is there, right? Are we generating sell side? Well, I guess, yeah, we are generating sell side. No, we take the sell side. Look at all of this. We take it. At 315, where are we? We at the lows. We're not at the highs. Boom. No final hour macro. Simple as that. Friday. Alright, Friday we're going up and we're staying up, right? So 250. 250, what do? Okay, we create lows, right? We're starting going up and we're creating lows. Okay, do we not take this low? No. And we have these relative equal lows from the AM. This one is a bit scuffed. Why? Because of the news, right? Like if we're going up normally, like the lows would be a bit slightly higher, I'd guess. Anyway, okay, 315. Are we near the highs? Yes, 315. We're right here. And where's our swing low that you'd say? This one seems a bit scuffed to me. So there is this. We got this swing lower that maybe I'd count as a breaker structure, but really it's like right here. We've been going up since here. So now once we go up and we create SMT here, because I know this one because I traded it. There's an SMT to this. Where's the breaker structure? Right here, right? And there's any fair value gap in this swing? Yes. This one's used. This one's used. There is this one with this volume imbalance used. So no trade until that has been run through, right? And then guess what? It runs through it. It creates the breaker, right? Breaker with a fair value gap. So stop loss, like it should never go above here, right? Basically in this breaker. You can see midpoint of it, but whatever, right? So first entry and then pyramid at the order block right here. Why? Because this, again, we still haven't reached the initial lows. So like if we don't take this low yet, we can still pyramid. The second that we take this, right, then you could probably take one off here and then the second off here. Final hour macro, simple as that, right? And you'll see this entry at 337, this high at near 330. So I'm telling you, manipulation nearly ends at 330, but you need to look at 315 and you have to gauge if we're near the highs, right? We have to be near the highs. We can't be like here at 315 and go all the way up to go back. No, that don't make sense. Okay, but the 250 macro should already create our liquidity to get to, right? So which, now thinking about it, the minimum target low should be the 250 low for the final hour macro. So where's the 250 low? Boom. So that's the lowest low at 250 right here. So that should be our minimum target. As long as we don't get to that, we can pyramid entry. Hey yo, I'm building perfect on perfect models, right? This is a really, it's a scalping model, right? It's like boom, get in, get out, but it's very high probability. That's what it is, right? Very high probability. Again, I'll probably be risking the same amount that I'm risking on my trades. and I'm making the same amount with less movement, right? And it's basically, if I miss the day, I got my second chance on like days like this, for example, that are one-sided. And with all-time highs, we do tend to get at least 1 or 2 days a week that's one-sided like this that will have a final hour macro. So yes, another model here explained being made, and we'll probably have 1 or 2 additions like to get refined even more, right? Until it becomes like this model, which till now, I'm telling you, this model will probably lose 1 out of like 25 times, right? This model, right? I want the final hour macro to be the same. Once I'm that confident with it, 1 out of 25 times type of thing to be losing. I want it to be good as good as like something like, you know, model 2022. That's basically like a 1 out of 25, right? You can't, unless you fuck it up, right? And it's on you, because a lot of stuff could look similar to 2022, but you need to understand everything about the market, right? It's not, none of these are pattern recognition models, right? These are just very specific in terms of what price has done and what it's doing and what it's trying to do related to the weekly, daily profile, everything, right? Targets, Judas, whatever, gaps, anything, everything has to be thought of before even entering, right? And if everything's thought of, and all the stuff that I have written down for this model is ticked off, till this day, I have not seen it lose. And I'm telling you, I've seen this model work out probably more than 30 times in a row, right? No loss, and not even close, right? When it's there, it's there. And it runs, and it's normally the low of the session and low of the day or whatever, right? And now, I'm gonna add the final hour macro, whatever. I have models that I don't mind trading them on Combine, right? Says like the delayed Judah that's on Combine, right? But there's models that I'm so confident in that will be the XFA ones. So now I have one model, I have another model, I have 3 models now that are basically XFA worthy. Okay, and all I'm saying, bro, I'm gonna be printing like there's no tomorrow. This is getting, my understanding is getting to a next level with this year, right? It's getting crazy. Anyway, now that we have reached our target, and we have our new daily opening gap here, I would not be surprised if we take this low. This is the whole change your market structure shift now, right? Because this gap, then I have not, there's nothing to support price to take down to these lows and whatever, and I might enter a short on ES or NQ, I don't know, very low NQ, like whatever, and then go to sleep, right? Expecting it all the way to continue all the way till news or whatnot. You know what I'm saying? So we'll see. This might be the high for now until the manipulation, or there might be an SMT or whatever. So we'll see. We'll see. I'll gauge price, and it might even want to go all the way up to OTE, for example, right? So think about this, like I said, as a model 2022. So you'd want to get the OTEs, right? Want to see when price goes to discount, how it reacts, how it goes if it goes to OTE in this area, and you can see gaps. No financial advice, but I'm just saying that's a decent amount of probability, but I haven't really looked into it. So yeah, and remember, look at all these lines, look at all these liquidities, and look at a gap. That's all I'm saying. Peace out.